Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're realizing some selling pressure today after 3 consecutive days of higher price action. We are seeing the 10-year note futures coming under a bit of selling pressure today, back into the 115 handle for the September future. 115.28 is where the futures market's currently trading. And I think when you look at some of the factors contributing to today's price action, there's a few themes here that the market's continuing to digest as we're coming out of expiration week and also the Fed announcement last week. We did see some significant volatility in various asset classes, but particularly in the treasury markets. So I think that you're seeing a reassessment of some of that volatility and some repricing of expectations as we move into a new week, and also looking at the dynamics of some of the price action in other asset classes, the equity markets, experiencing a nice move higher here today. So I think you're seeing a rotation, restructuring of exposure to the market a little bit here with the rebound in the equity markets. So selling pressure in the treasuries, leading to some buying pressure particularly in the equity markets today. And also the other dynamic is a lot of the different narratives that are going to come out this week. Now, we have some Fed speak today. The market, I think, is reacting to that. Treasury Secretary speaking today as well. Testimony on Capitol Hill tomorrow and Thursday by the Fed chairman. So I think that that's going to be an influence in the Treasury markets as well this week. And so those dynamics are playing out. So now when you look at the yields here on the 10-year, we are seeing yields higher today. We're seeing them up about 7 basis points to 231 basis points on the 10-year. We're seeing the 2-year through the 30-year yield curve steepening today. So we're seeing that dynamic playing out. But what also is interesting is we continue to see some volatility in the short end of the curve, particularly in the 6-month yield today. We're seeing quite a reaction there relative to the rest of the price action within the Treasury markets, as the yields in the 6-month have moved up significantly day over day relative to the rest of the curve. So there's a dynamic playing out there. Maybe it's in reaction to some of the themes or some of the narratives we're getting today from either Fed officials or the Treasury Secretary, or the expectations moving forward regarding the interest rate environment and possibly setting up for the testimony tomorrow. But nonetheless, you're looking at the various durations today. The 6-month really is selling off much more so, pushing those yields higher. And then when you move really from that point on, and particularly when you get to the 2-year through the 30-year, you're seeing a steepening of the curve today as the back end is selling off more so relative to the 2-year durations in today's price action.